You're right, guys, welcome back. It's been a couple of weeks since I put a video out. We've been working very hard in the background, doing lots of filming on a new product that we're developing over at Trade Empowered in the background, so keep an eye out for that in the future. But for now, I wanted to put a video out today just because of this week in the London Live Room. We had lots of you guys came in this week. There was lots of new members in the room this week. And one of the comments we get a lot is how you enjoy how simple the concept of my analysis is. You like how we build out those kill zones and make it very definitive. Lots of traders struggle and they come from, you know, looking various systems. Rather than concentrating on their one system and developing that, they're sort of overwhelmed by too much information. And they come into my room and they see how mundane and robotic and monotonous my analysis is, but yet how simple the concept is behind it and how effective and powerful that can be. And one of the comments we got from one of the members this week was, "Jason, could we please swap brains?" Now, I was quite taken aback by this because the great thing about the style of trading that we teach is it's 100% transferable. I don't have a particularly great economic background. I don't have amazing education results or anything like that. I'm from a normal family, you know, raised on a council estate in South London. But the difference is I decided to give 100% investment in myself to this and learn it, right? So the great thing about this is anyone can learn this stuff. You don't have to be clever or intelligent. You just have to invest in it 100%. It can be as easy or as painful as you like. Either way, it's not going to be easy, right? And by that I mean, you know, either way you're going to have to put work in, but you can make it as pain-free or as painful as you like. And by that I mean you can either go off searching for the next best system, or you can just focus and get that tunnel vision on the system that you're developing and just build and build on that. And the best way to do that is to be very very center focused, ignore all that rubbish that's going on around you and just develop the system. So what I wanted to run through in this video is almost a complete session of the London Live Room. It's a bit different, so there's lots of analysis in this video. Go through a few currency pairs, some analysis that played out later in the day. We update at the end of the video as well, and there's some opportunities that you might want to pay attention to on the open next week. So we've had lots of great feedback on the other videos, so sit back, enjoy the analysis, and I'll see you soon. Now, Aussie CAD on the daily. A little bit of a change of direction here. We've got this consolidation that's been happening for a long time now, few weeks, consolidating, moving sideways, right? Now, if you look at this candle we put in yesterday, right, we actually put in, what's this? Lower low, lower close candle, right? Lower low, lower close candle, which signifies we could get some bearish continuation here, right? As we drop down to the 60, right? See this? Broke, closed below, probably 1 or 2 pips, 2 pips. So as we drop down to the 15 then, if we can push up into this level around 9,900, okay, that's where we're going to have our harmonic move, right? Previous structure support, look at this. Previous structure support, 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 support. What else have we got at this level? Right, we're bearish on this time frame, okay? Confirmed bearish. What else have we got on this level? Even handle number, yep. Okay, what else can we do here? One, 4, 1, 4. Confluence. You guys know what I'm getting at, don't you? We can bring on Fibonacci inversion. Okay, we can before we do, let's take an extension from this swing low to swing high and back down, and we get a 127 extension. Right on that line. Look, that's confluence. 9900, 9900, 9900. Right? Okay. Now let's take on a Fibonacci inversion. One 618 inversion. Look at this. Okay. We can even take, this move hasn't finished. We can even take an inversion from this swing high to swing low and back down. And look at that, 127 extension on the 9900 as well. Now, would you agree that this is a good area to look to get short? This would be the first kill zone. Fib confluence. You've got a Fibonacci inversion trade set up there anyway. So there's different ways you can enter this. I mean, some of you might just set that limit order at the 1618 and look to take targets down at the 618 retracement. So something like this for your targets. And then what you would do is, if you're trading a Fibonacci inversion strategy, what you do is you set your stop loss, typically half of your reward. So it's always a 2-to-1. So you work out half of your reward in pips, and then you set that stop loss. Okay, I don't actually trade that as a strategy yet. I am testing it still, but I haven't finished. But I know some people trade this as they wait for a doji candle here, right, or an RSI to go overbought, or a little retest of structure, and also they look to take targets at a retest of the lows down here. So depending on how you trade that, okay, there's an opportunity there. Nonetheless, very good level to look to get short. Okay, so that's what we're looking at on this. Right, let's bring on a Fibonacci retracement, and you could build. Oh, look at that. 382. This deserves one of these.
Holy cow.
382 retracement, right? Major Fibonacci retracement ratio used for retracements. You got a 382, a 1414 extension, a 127 extension, 1618 inversion, and a 127 inversion as well. And then you've got ABCD harmonic move. Most importantly, structure support at that even handled number. Okay, so very high score as far as I'm concerned. You may build up a CTS system. You know, you may say to yourself, well, if we've got that much confluence, then I just set a limit order at that level. You know, you might have a limit order set at 98.98. Okay, stops a measured move, whatever you shouldn't be trading any of this until you've tested it. You know, as exciting as this all looks, I still can't enter this until it meets my entry reason rules. Right? So until I've finished testing this strategy the way I'm testing it, I won't be looking to enter this in any other way than my trade plan rules says. Right? And yes, you have unemployment on the CAD later. You want to be... This is the 15-minute chart, remember? So, you know, you've got lots and lots of time before that. Keep an eye on this. but I'm showing you guys, you know, this sort of analysis you guys seem to really enjoy, and I think that's a pretty good bit of analysis there, showing you the next kill zone. Lots of you enjoy how we build out these kill zones. Well, that's a really, really, really narrow one. Pound dollar on the daily. Okay, pound dollar. You know, I've got a bearish bias on this. I explained yesterday about that 37.46 level. There's no one new in here today for the first time, so I don't need to explain all that. Zoom out again. But I am expecting, there's this big back, this is a Gartley pattern, isn't it? We've got this big Gartley pattern down here at 39.33. Okay. And I'm expecting at least a retest of these lows, and I'll tell you why, because if we go down to the 4 hour, we've had this lower, low, lower close. What does that signify? Signifies continuation. Okay. Obviously we need, you know, we've pushed up on the higher time frame, put in this higher high, come down, tested this level, put in a higher a lower high, then we broke down and broke this level. If we drop down to the 60, if market pushes up, we've got this back pattern up here at 42.86. Let's just measure this out to make sure it's okay. Yep, back pattern formation at 42.86. So if we can push up here, there's your reason to get short. Okay, if we can push that far up, and really that's all I'm looking at the moment, other than this level here. So look what happened here. We pushed down, we broke and closed below, then we pulled right back up and hit this like a wall. So this level here at 41.60, okay, 41.60, we came up, hit that like a wall, then we retraced back down. Now if we can come up and retest this level, this will be a decent opportunity to look to get short. Okay, so this will be the first area I pay attention to. And then obviously if price action pushes up, we know we've got another opportunity up here. Okay. But this will be the first area I'm looking to get short. Unless there's something on a lower time frame. We'll do 1618 up there. Got a 50% retracement there. And obviously, guys, most important of all, we've got that structure level there. Okay, so we've got that little structure shelf, structure. And this level seems to be respected. Every time it's hit, there seems to be some sort of reaction. So if it's been protected once and we're bearish, chances are if we test this level again, it's a decent level for a short. So not much happening. We're pushing up at the moment. We'll see what happens with this. We'll come back to it in a minute. And these yen pairs are really, we're just looking for these pullbacks. Following on from yesterday, we was looking at the pullback into structure and identifying the next kill zone. We just did the euro yen. And we're now going to look at the pound yen. And you see on the daily, look, we've put in yesterday again. Bearish, right? Break and close below, finally. Now, what area are we looking at on the yen? Anyone remember the next level of support? In fact, this was pretty... This is a bit of a mess looking left. 150s. 150 flat, I would say, is the next level to pay attention to, just because of that. Maybe a little bit higher. Maybe a little bit higher, but down here at 150, 150.50. Okay, looking left. So we've got a bit of room for movement. We've put in this bearish candle here. Put in this bearish break and close below yesterday. So we know we want to get short. Can we get involved? Well, the first area I'm looking at is this previous structure support level here. If we can push up into this level here, that's going to be the first area that I look at to get short, okay? And you can see that we are actually pushing up to this zone. We've got a couple of these little doji candles in here as well, looking left. And if we can get up to this level, this will be the first area I look at getting short. Now, the question is, how do we get involved? Okay, we've predicted the market, we've identified the market's bearish, predicting where market's likely to go down here at 150s. Okay, now we just need to decide how we can get involved, and that's where you get out your trade plan rules and you say, right, what do I need to enter? You know, we're putting in this little pullback now. Where's market likely to come to? Well, let's drop down to the lower time frame. Bring on a Fibonacci retracement from this previous swing high, swing low. We've got a 382 lining up with that previous structure support level on the 60-minute. Okay, so we got 382 in there. So we can't bring on an ABCD pattern. If we bring on a Fibonacci extension, don't quite get a 1618 either. Little bit short there as well. But what I am looking at is this zone, because look, we've got this little structure level here. 382, previous structure support. We have got a 1618 up there as well. Nothing to, you know, scream home about. It's not really. It's like 20 pips. There's 20 pips in that. Let's just drop down to the 15. Right, if we push up to this level, I can get stops above this high as long as it doesn't violate my 100 pip stop level. Now, you can see that it's a pretty high ATR, and we might violate my stop level here. We'll violate my stop level, I think, because if I've got to get an ATR above this high, here we go. Right, 35. 35, so if we get up to this level, I know that my stops have to be 35 pips above this high. So 37, my stops will be about here. Okay, and if my stops are at 55.76, I know that my minimum entry has to be at 54.78, okay, to get under that 100 pip stop level. So you can be well ahead of the market, and you say to yourself, well, if market pushes up to this level here, I can't enter anywhere outside of this this red zone. Does that make sense? Now, I know some of you guys might just say, well, if it pushes up into this level and doesn't violate this structure higher, well, then I just enter, as long as it's in my stop limit. Well, these are just filters I have in my trade plan that allow me to only take the highest risk-reward trades and the highest probability trades. So not only do I have to push up in here and not violate this high, I need to put in a lower low, lower close candle within this red bar as well. But if we get them rules met, look at the reward to risk profile. Right? 1, 2, nearly a 3-to-1 trade. Now, if you're waiting for price action to push up to this level and put in a retest of structure, okay, then you could put an ATR above the high, and all of a sudden you've got 1, 2, 3, 4, 5 and a bit to 1 reward to risk. Make sense? That's the sort of trade you want to be in. Okay, so that's what we're looking at on this yen pair. So again, it's another pullback into a level that we're eyeballing. Same with all of these yen pairs. And yesterday, remember we said that we were on the downward move, and I said we need a pullback of some sort. Well, now the pullback's happening. Now we can really sort of drill out these kill zones. So this is the area I'm paying attention to, 154.50s to 155s, this zone here. Right, this zone here, but I know that I have to enter within this red stop limit here. Okay. Alright guys, so just to update you on what happened on this trade, we're actually looking at this 9900 level up here. So, you know, some of you guys were eyeballing this area. You would have had your I said, you know, you might want to get your front run your orders just under that 9900 even handle. I probably would have had my, well, I would have had my orders, I personally would have had my orders at 98. So I wouldn't have quite got filled, but if you front run your orders by a bit more, you may have got filled if you've got an entry reason. And you can see, you know, I went out, so I wasn't actively in the markets anyway. So I couldn't get involved, but you can see the power of this analysis. You know, the power of the analysis and the whole thought process behind it is we're trying to think like as many other traders as possible and narrow down that kill zone that gives us all that confluence and confirmation in an area of the market where market is likely to react, see some sort of bounce or pullback or whatever you're eyeing up at the time. And you know, it's very simple but very powerful. And this is what the CTS system is all about. This is what you learn on the 12-week transformation course. There's a complete week-long module with homework and questions and answers and a special CTS scoring sheet that you get as part of the course. And this is one of the things that completely transformed my trading and allowed me to become successful, just by giving that those definitive rules to structure-based trades. It really is powerful stuff. And you can see we got a really high score here, a lot of confluence in this zone. You see we pulled up. We didn't quite make the area, but you can just see the analysis. You don't get involved in them all. But you know, the idea is to get involved in those highest probable trading opportunities, and you see the power of that there. So, just wanted to bring that to your attention, and I know it's quite popular with you guys, so there we have it. Another thing I wanted to pay attention to going into we're probably not going to get there today, but we're going to close. Market will close tonight, and this is something to pay attention to going into next week. So we was eyeballing this area earlier in the live room. We had this 1618 extension, and we had a 50% retracement. We was trying to build out this kill zone based off of what happened here. We had this lower low, lower close. We pushed up. We retest this level, and we held. It was like a brick wall. It falls all the way down, comes all the way up, and boom, holds this level. And since then, you know, we've been looking for reasons to get short. Well, the first reason, again, the first area I look for is previous structure support. Okay, and as we push up into this zone, which lines up with previous structure support, again, it's not spot on, but it's, you know, that zone there, we came down, tested that level, broke down, come up, it held, broke down, come up, we held again, and as we push up to that level, we can start to look for reasons to get short at this level. Now we've got this 41.65, we've got 41.50 a little bit lower as well, but now you can see markets putting in this this formation here, and we're putting in this formation here, which we know as a deep Gartley formation. Now you can see if we go X to A, you can see that we push right up into that 618, almost touching the 786, but doesn't quite. So if we bring on our Fibonacci Extension tool, you can see we're going to have a Gartley pattern formation. The 127 lands right in that kill zone there at 41.67, giving us our X to A to B, B to C, and CD completion up at 41.67. So that's something to pay attention to right on the kill zone we was looking at earlier. Something to pay attention to going into next week, probably now. So keep an eye on that on the open. Okay. Another pair I wanted to share with you guys to pay attention to into next week is the euro dollar. You can see that we've come down, we've put in this bat formation here. So we touch our 50%, looking at the 1441 up at the 886 retracement, giving us a bat formation. Now, that'll be a retest of this previous structure high. You know, we're bullish on this pair. It is a bearish pattern in a bullish trend. However, I have to trade every pattern I see that meets my rules, so I'll have to get involved with this if we see a completion. So that's another area to pay attention to for all you bat formation traders. I know there's many of you out there. You want to keep an eye on this one. And another pair I wanted to make you aware of is what I was looking at earlier on the pound yen. We was looking at this area here. If you look left, we had this structure level looking left. We were starting to build out a little kill zone here. We had a 1618. First of all, we're going to go off structure, right? So we're looking at the structure level. Then we were building out a kill zone, and we had the 382 retracement lining up with a 1618 extension up in this area. I was building out this little kill zone up here, all based off of structure here, and at this previous structure level, sorry. And if we can see markets pushed up a bit more. So now if we bring on a Fibonacci extension tool and use it as an inversion from this most recent swing low to swing high, you see we've got a 127 lining up with that 382 as well. Let's just clear that up. Okay, so we've now got a 127 extension, a 382 retracement, a 1618 extension from this swing low to swing high. And if we bring on a harmonic move, we're a bit higher for a harmonic move, but you can see we still don't violate this structure level. So again, this kill zone up here, this will be the area I look to pay attention to on the open. And guess what? Even if you're not a structure-based trader, we can bring on our Fibonacci retracement tool. We see that we hit that 618. So from B to A to B, we hit another 618, which puts us on Gartley pattern alert. So if you're not a structure-based trader and you just trade advanced pattern formations, well then you've got this 127 extension giving you a Gartley pattern completion. So you'll be looking for you'll be looking to get involved at the 127 extension if you trade Gartleys that way. And again, something to look for on the open. Now, there's a few other things on the radar. I'm not going to go through everything because the video will be far too long, but you can see you've got lots and lots to look at there. Lots of different trading opportunities and different styles. So keep an eye on that on the open, guys, and I'll talk to you next week. Alright guys, so that was it. I hope you enjoyed that video. It was a bit longer than normal. We went through a few currency pairs. There's a few things to look at on the open, but most importantly, you got to see how we very simply build out that kill zone, trying to think like all the other traders and narrow down that confluence in that zone. And the joke about the Butler mug, we always have a joke about, I've got a big collection of random Larry mugs. Today I thought I'd simmer it down. I've got my trading powered mug. But the point of the video is, anyone can learn this stuff. If you're interested in that CTS style of trading, which will, make you ultra conservative to begin with, and then allow you to develop your trade plan by removing the necessary filters or filters that you think aren't as important as others, and it really allows you to develop your trade plan depending on your personality. And if you want to learn that, you can go over to Trading Powered. The website's below. I recommend it. It completely transformed my trading. But if not, I'll see you in the live room next week. And don't forget to follow me on Twitter. We've got a great community of traders over there. Twitter, Instagram, Facebook, TradingView, and all of the other social medias you can think of. It's J_Graystone. And don't forget to subscribe to this channel and like and comment this video. And I'll see you on the next one.